Welcome back to another episode of Journey TV, your trusted source for in-depth analysis of the ever-evolving world of digital finance. Today, we are delving into a groundbreaking development that has sent shockwaves through both traditional financial markets as well as the crypto community everywhere. The United States government's announcement of a strategic cryptocurrency reserve. This unprecedented move, it signifies a monumental shift in how digital assets are in fact perceived and integrated into national financial strategies. By incorporating leading cryptocurrencies such as Bitcoin, Ethereum, XRP, Solana, and Cardano into its reserves, the US is not only acknowledging the legitimacy of all of these digital currencies, but it's also positioning itself at the forefront of the global financial revolution. In this episode, we're going to explore the implications of this strategic reserve, the selection criteria for these specific cryptocurrencies, and what this may mean for the future of both the US economy and the global crypto landscape. The establishment of a strategic cryptocurrency reserve, it marks a significant departure from previous governmental skepticism toward digital assets. Historically, those cryptocurrencies, well, they have been viewed with caution, often associated with volatility and regulatory challenges. However, this initiative, it reflects a growing recognition of the potential benefits that blockchain technology and digital currencies can offer, from enhancing financial inclusion to providing robust alternatives to traditional monetary systems. By integrating cryptocurrencies into the national reserves, the US government is signaling a readiness to embrace innovation and adapt to the rapidly changing financial ecosystem. This move not only bolsters the credibility of these selected cryptocurrencies, but it sets a precedent for other nations to strongly consider similar strategies, potentially leading to a more interconnected and much more resilient global economy. In the following sections, we're going to dissect the factors that led to the creation of the strategic cryptocurrency reserve. We're going to analyze the selection of Bitcoin, Ethereum, XRP, Solana, and Cardano, as well as assess the potential impacts on both domestic and international financial systems. We'll also take some time to explore the reactions from various stakeholders, including financial institutions, policymakers, as well as the crypto community, to better understand the broader implications of this initiative. Whether you're a seasoned investor, a crypto enthusiast, or maybe you're simply curious about the future of money, this comprehensive analysis will in fact provide you with valuable insights into one of the most pivotal developments in modern finance. So be sure to stay tuned as we begin to embark on this journey to uncover the nuances of the United States strategic cryptocurrency reserve, as well as its potential to reshape the financial landscape. Let's talk about why the United States is establishing this strategic cryptocurrency reserve. The decision to create a strategic cryptocurrency reserve is not a random policy shift. It is in fact a calculated move driven by economic, geopolitical, and technological imperatives. As the global financial system continues to face increasing uncertainty with inflation, debt concerns, and don't forget shifts in monetary policies that are affecting traditional markets everywhere. Those digital assets, they present a unique opportunity for financial resilience. Bitcoin, Ethereum, XRP, Solana, and Cardano are not just speculative assets. They are in fact part of an evolving financial infrastructure that enables faster transactions, decentralized finance, known as DeFi, and enhanced security in an increasingly digital world, which all of us could use more of. The US government is positioning itself ahead of the curve by securing these assets early, ensuring it has leverage in a future where crypto may play an even more dominant role in global commerce and finance. Another key factor in the US government's decision is the ongoing global race for digital dominance. Countries like China have already advanced significantly in the digital asset space with the development of their CBDC, known as their central bank digital currency, the digital yuan. Meanwhile, countries like El Salvador and the UAE have integrated Bitcoin into their financial frameworks, thus signaling that sovereign crypto adoption is no longer theoretical, but in fact an active reality. By accumulating a diverse portfolio of cryptocurrencies, the United States aims to fortify its economic influence and ensure that it maintains a leading position in the rapidly evolving digital financial ecosystem. This move, it also sends a strong signal to the private sector that blockchain technology and DeFi will be integral to the future economy, encouraging further innovation within the US market. Beyond financial and geopolitical factors, there's also a technological and security aspect to this decision. Blockchain networks like Ethereum, Solana, and Cardano are not just about digital currency. They are in fact about programmable ecosystems that can and will revolutionize industries from supply chain management to national security. By integrating these assets into the strategic reserve, the United States government gains first-hand exposure to the capabilities of these technologies, potentially utilizing them for secure data transactions, smart contract-based governance, and even financial infrastructure modernization. This strategic accumulation of digital assets isn't just about financial hedging. It's about securing a role in shaping the future of blockchain innovation. With this reserve in place, the US is making it clear crypto is not going anywhere, and it's time to take it very seriously. seriously. So why were these specific cryptocurrencies chosen? The selection of Bitcoin, Ethereum, XRP, Solana, as well as Cardano for the US Strategic Cryptocurrency Reserve was not arbitrary. It was a strategic decision that was based on the unique roles that all of these assets play in the ever-evolving financial and technological landscape. Each of these cryptocurrencies brings something incredibly distinct to the table, making them very valuable additions to a very diversified digital asset reserve. Bitcoin, as the world's first and most widely adopted cryptocurrency, has long been considered digital gold and a hedge against inflation. With its fixed supply of 21 million coins and strong decentralization, Bitcoin represents a store of value that governments everywhere and institutions can finally rely on in times of economic uncertainty. By accumulating Bitcoin, the United States is following a very similar strategy to sovereign wealth funds as well as corporate treasuries that are finally using Bitcoin as a hedge against the decline of fiat currencies. Ethereum, Solana, and Cardano, they were all chosen for their smart contract capabilities and technological innovation in DeFi, as well as blockchain infrastructure. Ethereum is the backbone of DeFi, NFTs, and Web3 applications, making it an essential asset for any entity that's looking to establish a foothold in the digital economy. Solana, it offers a high-speed, low-cost alternative to Ethereum, making it a crucial player in payment processing, gaming, and other high-transaction applications. Cardano, ADA, was included due to its focus on security, scalability, and sustainability, backed by peer-reviewed research and strong institutional partnerships. These assets represent more than just currencies. They are foundational technologies that could revolutionize sectors ranging from banking and identity verification to healthcare and governance. The inclusion of XRP is also quite noteworthy, as it signals the US government's recognition of blockchain's role in global financial transactions. XRP is designed for efficient cross-border payments, offering a viable alternative to the traditional SWIFT system, which has long been criticized for its inefficiencies and very high costs. With central banks and financial institutions already leveraging XRP for real-time settlement, the US likely sees it as a strategic asset for maintaining dominance in international finance. Together, these 5 cryptocurrencies, they form a well-balanced reserve that covers store of value, financial infrastructure, global payments, and decentralized innovation. This selection not only validates their long-term potential, but also suggests that the US is preparing for a future where digital assets play a crucial role in national and global economic policies. With this strategic reserve, what is the impact on the US economy and the financial system? The establishment of a strategic cryptocurrency reserve will have profound implications for the United States economy and financial system. By holding digital assets like Bitcoin, Ethereum, XRP, Solana, and Cardano, the United States government is diversifying its financial reserves beyond traditional assets like gold and foreign currencies. This move, it strengthens the nation's economic resilience, as crypto reserves are not tied to the same inflationary risks or geopolitical dependencies that affect fiat currencies. Additionally, with Bitcoin often referred to as digital gold, having Bitcoin in national reserves, it provides a hedge against economic downturns and fiat devaluation, thus ensuring that the United States remains financially competitive in a world increasingly adopting digital assets. This strategy mirrors the approach taken by some corporations, hedge funds, and sovereign wealth funds around the world that have added Bitcoin to their balance sheets as a long-term store of value. Beyond acting as just a hedge, the integration of crypto into national reserves could also bolster the United States dollar's dominance in the global economy. As more countries explore central bank digital currencies known as CBDCs, as well as alternative financial networks, maintaining control over digital asset liquidity and settlement mechanisms will be crucial. The US could leverage its crypto holdings to support blockchain-based financial infrastructure, ensuring that its economic influence extends beyond traditional financial systems. Additionally, with XRP and Ethereum playing a major role in cross-border payments and DeFi, the US could potentially modernize its financial rails, reducing reliance on outdated systems like SWIFT. Gotta go. This could lead to faster, cheaper transactions for both domestic and international financial markets, positioning the country as a leader in blockchain-driven financial innovation. The adoption of a strategic cryptocurrency reserve may also attract further institutional adoption of digital assets in the US, creating a positive feedback loop for economic growth and innovation everywhere. If businesses and financial institutions see the government accumulating crypto assets, it signals long-term confidence in blockchain technology, potentially leading to an influx of private investment. This could in fact result in the expansion of blockchain-based industries, job creation, and technological advancements across multiple sectors. Moreover, the government's active involvement in crypto, it could provide clearer regulatory guidance, thus reducing uncertainty for the investors and developers who have long been navigating in a very murky legal landscape. Ultimately, this strategic move, it has the potential to not only fortify the United States economy, but also establish the country as a dominant force in the future of global digital finance. So how does the United States Strategic Cryptocurrency Reserve affect the global crypto market? Well, the United States' decision to establish a strategic cryptocurrency reserve will in fact send ripples across the global crypto market, reshaping reshaping both sentiment and investment strategies worldwide. The mere acknowledgement of Bitcoin, Ethereum, XRP, Solana, and Cardano as strategic assets by the world's largest economy, it legitimizes digital currencies on an unprecedented level. For years, many governments have remained skeptical of crypto, dismissing it as a speculative bubble or a tool for illicit finance. Now, with the United States leading the charge, other nations may in fact follow suit, potentially kickstarting a wave of global crypto accumulation by sovereign states. If this trend continues, it could in fact trigger a supply squeeze, thus driving up the prices of these assets and reinforcing their status as essential components of modern financial systems. Beyond just price appreciation, this move shifts the narrative around crypto from being an alternative financial system to in fact a core pillar of global economic strategy. Institutional investors, hedge funds, as well as central banks that were previously on the fence about entering the crypto space may now in fact view digital assets as a necessary hedge and diversification tool. Countries that have been hesitant to regulate or integrate crypto into their financial systems, they'll now face pressure to either adapt to the digital revolution or risk falling behind economically. This could lead to more favorable regulatory environments, increased capital flows, and maybe even a greater push toward blockchain-based financial infrastructure worldwide. The United States has effectively validated crypto's long-term viability, thus setting a precedent that could reshape global investment strategies for decades to come. However, the geopolitical implications of this move cannot be ignored. The accumulation of strategic crypto reserves could ignite a new type of digital asset arms race, where nations compete to stockpile leading cryptocurrencies. Just as gold reserves were once a measure of economic power, crypto reserves could become a modern-day equivalent, influencing diplomatic relations and financial policy. Countries that already hold substantial Bitcoin or have already integrated blockchain into their financial systems, such as El Salvador, Switzerland, and the UAE, just to name a few, may all gain newfound leverage in international negotiations. Meanwhile, adversarial nations may in fact look for ways to counteract US dominance in the crypto space, potentially leading to fragmented financial alliances built around different blockchain ecosystems. Regardless of how this geopolitical landscape shakes out, one thing is clear. The US has made a bold statement that crypto, it is here to stay, and the rest of the world, well, they must now take crypto seriously. Let's get into the political and regulatory implications of the United States cryptocurrency reserve. The very creation of a United States strategic cryptocurrency reserve doesn't just impact financial markets. It has profound political and regulatory implications that will in fact reshape the future of crypto policy in the country for years to come. For years, digital assets have existed in a regulatory gray area, with policymakers in fact divided over how to approach the sector. Some have pushed for strict regulations, citing concerns over financial stability and illicit activity, while others have in fact advocated for pro-innovation policies that support blockchain development. Now, with the government actively accumulating Bitcoin, Ethereum, XRP, Solana, and Cardano, it signals that the US is not only accepting crypto's legitimacy, but also preparing to integrate it into national financial strategies. This shift will likely accelerate regulatory clarity, as the government will need to establish frameworks that ensure secure storage, compliant trading, and effective risk management for its holdings. From a policy perspective, this move could lead to a more favorable legislative environment for crypto businesses and investors. If the US government is actively holding digital assets, it stands to reason that it will work to protect their value and promote market stability. This could mean clearer taxation rules, streamlined compliance measures, and potentially reduced regulatory pressure on all exchanges and blockchain projects. Furthermore, as the government gains more insight into the practical applications of blockchain technology through its holdings, it may push for more widespread adoption of digital assets across various sectors, including but not limited to public infrastructure, banking, and national security. However, this also raises concerns about how the government might attempt to control or influence certain blockchain networks, especially as policymakers debate the role of decentralization versus state oversight. On the global stage, this decision will likely put pressure on other regulatory bodies, such as the SEC and the CFTC, to help align their approaches to crypto governance. The very existence of a national crypto reserve may force regulators to strongly reconsider their positions on digital assets, possibly leading to new classifications, updated securities laws, and enhanced consumer protections. At the same time, this move could also intensify political divides, with some policymakers advocating for further crypto adoption, while others raise concerns about government involvement in decentralized systems. The key question moving forward is how much control the government will attempt to exert over the crypto markets, and whether this move will actually lead to more innovation or tighter restrictions. Regardless of the outcome, one thing is inevitably certain. Crypto is no longer on the sidelines. It is now a strategic asset, front and center in both financial and political arenas. What is the future of these asset reserves, and will other nations follow? Well, with the US taking the unprecedented step of establishing a strategic cryptocurrency reserve, the inevitable question arises: will other nations follow suit? Historically, when the US makes a bold financial move, whether it's adopting the gold standard, launching the petrodollar system, or restructuring trade agreements, the rest of the world pays attention. Given the increasing role of digital assets in global finance, it is highly likely that other economic superpowers such as China, the European Union, and Japan will explore similar reserves to ensure that they remain competitive. Nations that have already been experimenting with crypto and blockchain integration, such as Switzerland, the UAE, and Singapore, just to name a few, may all see this as confirmation that digital assets deserve a formal place in national financial strategies. The US may have fired the starting gun on a global race to accumulate crypto reserves, and the repercussions could reshape international finance for years to come. The impact of other nations following this model could be twofold. On one hand, it could accelerate crypto adoption and mainstream legitimacy as governments worldwide integrate digital assets into their national reserves. This could drive greater liquidity, enhanced financial stability, and increased investment in blockchain infrastructure. On the other hand, it could also trigger geopolitical and economic tensions. Just as countries once competed to stockpile gold, a strategic push to secure Bitcoin, Ethereum, and other major digital assets could lead to supply shortages and market manipulations. If certain nations aggressively accumulate crypto reserves while others lag behind, it could in fact widen economic disparities and potentially create a new form of financial power struggles within the digital era. The balance of economic influence, it may shift towards those who secure dominant positions in key blockchain ecosystems. One of the biggest unknowns is how central banks will in fact respond to this move. With many nations around the world already exploring CBDCs, known as central bank digital currencies, it is very possible that some will in fact prefer to build their own sovereign digital assets rather than adopt decentralized currencies like Bitcoin. However, given the established dominance and security of leading blockchains, some countries may see more value in accumulating existing digital assets rather than creating their own. If the concept of international adoption of crypto reserves grows, we could see the emergence of a new global financial system where digital assets, they serve as collateral for sovereign debt, trade agreements, or even foreign aid programs. Regardless of how this unfolds, the United States' decision to establish a strategic cryptocurrency reserve, it is more than just a national move. It is in fact a catalyst for a global financial transformation, and the world will be forced to respond. The very creation of a United States strategic cryptocurrency reserve, it's more than just a policy decision. It is a defining moment in the evolution of global finance. By officially recognizing and accumulating Bitcoin, Ethereum, XRP, Solana, and Cardano, the United States is signaling that digital assets are no longer speculative fringe instruments, but in fact fundamental components of the future economy. This move has far-reaching implications, from strengthening national financial resilience to reshaping the geopolitical balance of power in digital finance. It sets a precedent that other nations will either embrace or attempt to counteract. But one thing is very clear. Crypto is now firmly embedded in the fabric of global monetary policy. Get used to it. The question is no longer if crypto will be part of the financial system, but rather how it will be integrated, regulated, and leveraged for long-term economic strategy. For investors, institutions, and blockchain developers everywhere, the announcement serves as a validation of the long-term potential of digital assets. The assets selected, Bitcoin, ADA, XRP, Ethereum, and Solana, have now been effectively endorsed at the highest level possible, which could further cement their dominance in the space. This move may also drive institutional adoption, as large-scale investors will feel increasingly confident in digital assets that are now backed by the government reserves. At the same time, that raises critical questions about government influence over decentralized networks, potential regulatory shifts, and how the United States might attempt to leverage its holdings for strategic economic advantages. The impact of this decision will unfold over years, if not decades, as digital assets continue their integration into mainstream finance. As we continue to look ahead, the convergence of traditional finance and digital assets is inevitable, and the US has now positioned itself at the forefront of this transformation. Are you ready for it? With the other nations that are likely to follow suit, we may be in fact witnessing the early stages of a new global monetary system where digital assets, they may play a crucial role in sovereign wealth strategies. Whether this leads to increased financial stability, enhanced innovation, or even new geopolitical rivalries, it remains to be seen. One thing is definitely certain: the world of crypto is changing faster than ever before, and those who stay informed are the ones who have the advantage. Here at Journey TV, we will continue to bring you the latest insights on how these developments will continue to unfold. So don't forget to like, subscribe, and smash that notification bell for more updates. Until next time, stay ahead of that curve, and always remember, the future belongs to those who start preparing for it today. Thanks again for watching Journey TV. We'll see you in the next one.